I want to talk to you about how to invest in real estate with no money and no credit. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka. Let's roll. In today's conversation, I want to talk to you about how to invest in real estate with no money and no credit. There are actually 5 steps. Step number 1, you want to get something called a hard money loan. So getting a loan from a hard money lender is a great option for real estate investors with less than stellar credit. So despite its name, hard money isn't hard to come by. It's everywhere, as a matter of fact. And hard money lenders are private individuals or groups who offer short-term loans that are backed by real estate. So those lenders are only interested in investment deals. They're not funding someone who wants to buy a house to live in, really. So the best part is that hard money loans can give you funds very quickly, often within days. And in our analysis, we've sometimes found deals where the hard money lenders advance the funds within the same day, within 24 hours. That's great. And this is one of that speed, that celerity in the deal making is what makes a lot of real estate investors use this source of funding for their business deals. They're quick, pinless, and easy to turn around. Hard money lenders do not consider credit scores as the be-all and end-all. They can actually determine who they lend to and what those loans look like. Okay? And if your credit score is good, great. But if not, guess what? Your application is still more than welcome. The majority of the time, what we've seen in our research is that hard money lenders only care about one thing. If the deal is a good deal, if the deal is a good deal or a bad deal. It really depends. Okay? And their main concern is the value of the home. If the numbers work, they'll be more than happy to fund the deal, whether you walk in with a 780 credit score or a 350 credit score. And a hard money lender will use the property as collateral. So if you don't pay them back, they take ownership of the property. That's why they care about the numbers. So if you bottom out, they will still make money. So if you have a solid deal on your hands with good profit potential, a hard money lender will likely fund it, even if your credit score is just, hey. And speaking about hard money lending, let's just talk about the drawbacks of poor credit. I mean, when it comes to real estate investing, a poor credit won't keep you from loan approval, but the interest rates are way higher than traditional bank loans. This is something you have to think about, especially when you want to talk to hard money lenders. Most interest rates range from 10% to 15%, depending on the lender. Hard money borrowers also have to pay points, which are a percentage of the loan, and points can range from 2% to 4% of the total loan amount. So you have to think about that. And so you'll pay heftier fees in exchange for convenience, but that's okay given the potential profit you'll walk away with. Another obstacle is that they may not cover the full cost of buying the property. So these lenders usually lend 65 to 75% of the current value of the property. So some will even lend based on the value of the property after it's been improved, although known as the after repair value, the ARV. So that leaves you to fund the difference or find another source of funding to bridge the gap, right? And how do you find hard money lenders? You can actually do a quick Google search for hard money lenders in your area and see what pops up. I guarantee you'll see a lot. And also you can actually go to your local Real Estate Investors Association, your REIA. You just go to the REIA meetings and network. Just ask for recommendations from the members there. It's a great source. All right. And once you've found a hard money lender, don't forget to make sure that the lender is reputable. You want to do some Google search. You want to ask people around. You want to ask for references. And we actually recommend that you do this by asking the lender for references and then following up on those references. You should also actually see if any complaints have been filed with the Better Business Bureau against your potential lender. At least one person associated with the hard money lender must have their real estate broker license. And you should confirm that their license is valid and check to see whether or not any complaints have been filed against it. Very important. Step number 2. So step number 1, get a hard money loan. Step number 2, you want to look for private money lenders. Okay, so you have the hard money lenders, but you also have private money lenders. And so private money can come from anyone looking for a return on their investment. I mean, we know there are a lot of millionaires in the United States and overseas, and those people are constantly looking for business deals. They're looking for, multiplying their cash or seeking a double-digit ROI on their money. So, yeah, look for those private money lenders. Again, this can be anyone from a structured lender to a friend, relative, business partner, or acquaintance. Even if your credit score isn't great, private money lenders can still lend to you, often with competitive terms. And the quality and value of your deal are much more important to a private money lender than your credit score. And private money lenders do not abide by a certain set of rules, so things like repayment terms, interest, and everything else is up for negotiation. And because it's that person's own cash, they decide whether or not they run your credit. And if you can show that your deal has value and that you can close very quickly and make a profit quickly, private money lenders can overlook the dings on your credit report. And another alternative to private money lenders is to use P2P lenders. So there are peer-to-peer lending platforms such as Fundrise, for example. And those P2P lenders will actually, or even lend you, they will actually bring the money to you. And for P2P, it's a little more complicated when it comes to real estate investment because their criteria are a little more stringent. However, you might be lucky to find a loan from there if the deal is well structured, if the deal is proper, if the deal is attractive, you should be able to get a loan even if you have no money and no credit, because that's the bottom line here, right? Step number 3, folks, you want to get a partner. So if you want to invest in real estate with no money and no credit, another option is to get a partner. There are many people interested in real estate investing and will happily use their credit to fund deals, provided they don't have to tackle the other heavy lifting, your work, right? So why don't you just look around in your entourage, in your professional network, and strike up a partnership with someone like that, someone who has A+ credit. So in exchange, you'll be able to lock down more funding for your deals. And so basically, it's the ultimate win-win. All right, you can actually you can compensate the partner. Remember, your partner can be anyone: a friend, a relative, a colleague, a neighbor, or someone you met from a local networking event or a Facebook group. Just remember, you want to partner with someone who has the skills and resources you lack, and vice versa. Okay, in this case, you lack the credit, so you want to partner with someone who has excellent credit and can secure the funding for your deals. And maybe you have something that they don't have. You might consider the best way to consolidate credit card debt and start rebuilding your credit history for long-term financial success. Okay, so what can you bring to the table? It really depends. Perhaps it's your time, your deal-making abilities, or another resource. You can work out a 50-50 partnership, so once the deal closes, you split the profit, or it can be 40-60 or 30-70. It really depends on what resources and skill set everyone brings to the table, right? And you guys should just work it out. And if you decide to go this route, I really, really, really want to give you a very important piece of advice. Please, you want to formalize your agreement by choosing a business structure and then registering your business. And then you want to have a lawyer present here, because this will protect your personal asset should your partnership run into problems down the line. Okay, so please enlist the help of a business lawyer to establish your company and also draft that formal agreement that you need to sign with your partner. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation about how to invest in real estate with no money and no credit. I want to talk to you now about step number 4. Make the seller the bank. In other words, choose seller financing. Seller financing is kind of cool because it is a strategy best utilized for properties that are fully owned and paid off. So if a seller doesn't need quick cash from the sale of their home and the cash flow isn't the issue, then this strategy could be a great option. When the seller finances a deal, they basically become the bank. In other words, you essentially have a mortgage with the seller. And with this agreements, the seller allows you to make monthly payments until you pay off the property or the term or the loan ends. So what are the benefits of seller financing? So you have little or no qualifying, the terms are negotiable, credit is not a factor, flexibility to meet needs, and very low closing cost, right? Because the seller is the financier at the same time. So seller financing deals can be a win-win for everyone. So the seller actually here dictates the terms, and many will not ask to see your credit score or dig into your finances too deeply. Meanwhile, the seller gets a monthly income stream. So for example, a retiree may actually love the idea of getting a set monthly payment for their home. Likewise, a landlord may want to unload a property without getting out of the market completely. So in both cases, a seller financing agreement could actually satisfy all sides and helping you build capital and credit along the way. And so the thing here is that how do you actually find a property owner willing to do this? You have a few different options. It really depends on where you live and your situation and so on and so forth. So you have, for example, you have vacant homes. So vacant homes present a great opportunity because all you have to do is to drive around your neighborhood and look for them. Then you want to contact the owners to see if they'll be interested in this type of arrangement. You also have the absentee landlords. So an absentee landlord is someone who owns an investment property but doesn't live in it. So you can locate absentee landlords by buying lists from realquest.com or listsource.com. So once you have identified prospects, you want to contact them to see if they will be interested in your proposition. You also can go to real estate industry gatherings, right? And this is where you actually meet people, and those events are great places to network and meet people who may be looking to get rid of an investment property. You never know. Step number 5, folks. I want you to consider wholesaling. Okay, now wholesaling is a common first step for new real estate investors, and this approach doesn't require you to fund anything. So the bottom line here is that your credit score often makes zero difference. So let me first explain to you how real estate wholesaling works. So step number 1, you find a seller who wants to sell their home. You then negotiate the price and terms with the seller and put together an agreement to buy the home. So that's the first step. Second step, instead of buying the home yourself, you find another buyer to take your place. So this could be another investor who wants to fix up the home or a landlord who wants the rental. And step number 3, that buyer will assume all the terms you have outlined in your purchase agreement, and they will close the deal. All right. So they take ownership of the home. The seller gets the amounts you both agree to, and you get, quote unquote, an assignment fee for facilitating the deal. And many real estate investors start wholesaling just to build capital. And a good wholesale deal could drive $5,000, $10,000, $20,000, or even more. Okay, and a few of those deals could help you rebuild credit too and generate serious capital in the process. So something you want to think about, all right? So let me just give you a very simple example to kind of illustrate this a lot better. Let's say you find a home for sale in your neighborhood that you can pick up at a discount. Now, you need to sign a contract with the seller for, say, $75,000. And then you flip. So you find a buyer, usually a landlord or another investor, and you flip the contract to them for, say, $85,000. You bought it for 75, you're flipping it for 85. And then you close. So the first step is, so the buyer brings that 85K to the closing table, where 75K goes to the seller and 10K goes to you. The end result here is what? $10,000 in your pocket. And voila. So folks, I really want to say here is that you can actually do this. This is very possible. A lot of people are doing this every single day in the United States and abroad. So one of the best things about real estate investing is that it's open to everyone, really. You don't have to have millions in the bank or a good credit score. You need passion, perseverance, and desire. Those are the three things that you really need. If you can package that, there is no ceiling to your success. So you want to be creative, make connections, and focus on finding the funding to close deals without good credit. And so today I spoke to you about the 5 steps. So how to invest in real estate with no money and no credit. Number 1, you want to get a hard money loan. Number 2, look for private money lenders. Number 3, you want to get a partner. Number 4, you want to make the seller at the bank through seller financing. And number 5, you want to consider wholesaling. Thank you so much for your attention, folks. I will see you another time. But until then, remember, stay marvelous.